Hello, all my dear students. How are you all? Please confirm me if you are able to hear my voice, see the video as well as the screen. Confirm me and then we can start. Yes, all okay? Okay, that's great. So in the last class, we have started with one of the very important topic of your accounts, and I would say that this is the most critical topic of your whole syllabus. That is the preparation of your final accounts. What do you mean by the final accounts? Those includes your balance sheet, profit and loss account, and obviously the trial balance is sometimes prepared, sometimes we need to prepare. So that is the something which we have already covered in the chapter number 1. But this chapter focuses on your balance sheet and your P&L. And if there are some notes to the account, so that is the another part, notes to the accounts. And then there will be one more chapter which will be also part of your financial statement, but this is a separate chapter in your curriculum that is called cash flow statement. This is also very interesting topic. So three things which form your, I would say four things which form part of your final accounts. That is your balance sheet, your P&L, notes to the accounts, as well as the cash flow statements. In general, if you see any audit report of any company, you can see that these are the four main characteristics which are part of all of them. Okay. So this is the foremost thing which you should know, that what do you mean by the final accounts? Final accounts is very clear to all. Now we have discussed, see they have given profitability statement is your trading and P&L account, your balance sheet, trading account, and we did one question on the trading account which was your illustration number 1, as well as I think we did one more question. Yeah, illustration number 2. That was for your P&L account. Okay. And then I asked you to do the illustration number 4, where you need to know various accounts with their heads named over there. Sorry, that was the example which was on your page number 223. There were many accounts which were mentioned on that list. You need to mark which account this will go, which ledger it will go, and whether it will be a debit item or whether it will be a credit item. So that was the homework which I expected on your page number 23. Any doubt in those examples? Any doubt, anyone? So these all were the items which we have, which you need to identify whether it needs to go to the trading account, whether it need to go to the P&L account, or whether it needs to be a debit or a credit item. So that was the question. Okay, can I move ahead, my dear? Are you all comfortable with this? Now I need to explain you one more concept. Okay, are you ready for one more concept? Yes, sir, we are more than ready. Okay, now just focus on your screens. For instance, what I am preparing is I am preparing a trading and P&L account of a business. Let's say this is a hypothetical example. Let's say we have the opening stock of 1000 rupees. We have purchases of 50,000 rupees. We have direct expenses of 6,000 rupees. We have sales of, let's say, 80,000 rupees. We have our closing stock of 7,000 rupees. Okay. So this is the information which they have given us for the trading part. When I am doing the total of both the sides, so on the credit side, it is 87,000, and on the debit side, currently, it is 57,000. So what is the difference? If balancing figure is the 30,000, that is your gross profit. That is your balancing figure. Everybody knows how to calculate the gross profit? Yes. So that we have calculated now. This gross profit will further be brought down by gross profit brought down in your P&L account as 30,000. And then we will write all the expenses on your left hand side, that is on the debit side. So for example, we have some stationery expenses of 5,000. We have interest expenses of 15,000. Postage of 2,000, and balancing we have the net profit. Let's write it downwards. We have the net profit, which is the balancing figure. So on the debit side, the total is 30,000, which is the gross profit which is being brought down. And on the credit side, on the debit side, the total is 5 plus 15, 20 into 22,000. So 22 minus 30 is your 8,000, which is the profit remaining. Now, my question to all of you, can you tell me what we write here exactly? To net profit, and there is one line more which we write over here. What is that line? Can any one of you tell me? What is the line? We write it to net profit dash and 8,000. What is that line? Come on, everyone. You should brainstorm a bit before understanding any new concept. You should know the earlier concepts. So if you know that answer, then we can move ahead. Yes. Anyone? Okay. Very good. Perfect. Wow. That's fantastic. So as of now, this concept is clear to all of you. We write, sir, over here, the net profit transferred to capital account. We write it as net profit transferred to the capital account. But if this is not a proprietorship firm, for example, what is proprietorship firm? Yes, one student is saying transfer to the balance sheet. Yes, better transfer to the capital and balance sheet is fine, but more precise is the capital. So always use the word capital. Okay. So when we say it is being transferred to the capital, so we have one proprietor. Let's say who is Mr. X. So his capital earlier was 1 lakh rupees. Now in balance sheet, what I will do? I will add profit for the current year. That would be 8,000 rupees. And the new capital, the closing capital, I would say that would be 1 lakh 8,000 rupees. That is what we do traditionally. That is the standard practice, what we do. But what if it is not a proprietorship firm? Instead of proprietorship, there is a partnership firm. And there are 5 partners: A, B, C, X, Y. There are 5 partners. Each have a separate capital. Let's say A has a capital of 50,000, B have a capital of 60,000, C has a capital of 1,20,000, X has a capital of 1 lakh, and Y has a capital of 1,50,000. And they have a profit sharing ratio between them. That they have a equal profit sharing ratio. That means what? It is 1 is to 1 is to 1 is to 1 is to 1. That means whatever the profit they are earning, they need to distribute amongst themselves. Okay. So now they have earned a profit of how much in this year? Yes, in this year, they have earned a profit of 8,000 rupees. Okay, they have earned a profit of how much? 8,000 rupees. So this 8,000 should be divided into all these A, B, C, X, and Y. Okay, so now if I divide this, each person 8,000 divided by 5, that would be your 1,600 rupees each. So I will add 1,600 to the capital of each partner. Now the new capitals would be, obviously you can do the total 51,600, 61,600, 1,21,600, 1,01,600, and 1,51,600. So this all calculation should not be shown to each of the partner in the balance sheet because the balance sheet would be now bulky. So now what the accountants say, what the experts say, that this net profit, this net profit which we are transferring to 5 of the people, this net profit should be transferred to not the capital account directly, but to the but to the profit and loss appropriation account, where profit and loss appropriation account. So this is a new account which we are going to learn. So when all the business expenditures are deducted, we get the net profit. That net profit needs to be distributed among the owner of the businesses. So we prepare the profit and loss appropriation account. So if there is a net profit, if there is a net profit, the balance will come from the P&L account on the credit side because it is a profit. Credit all gains and income. So by profit and loss account, so 8,000 is now here. Now whatever distribution I am making to the partners, that will be mentioned over here. Whatever, well, I said whatever. So it may be interest on capital. If they are entitled to receive interest on capital, that will also come over here. If they are entitled to receive some salary, that will also come here. If they are entitled to receive commission on any sales which they have made, that will also come over here. And lastly, obviously the remaining profit which is there, that should also come over here. Okay, so that is why this P&L appropriation account is prepared. This P&L appropriation logically means whatever is the profit that has been appropriated to what items, that whatever is the profit that is being appropriate to whatever items. Now just forget everything what I have told you right now. I will give you some other example through which you will have a image of what is happening. Suppose in your family, you have your father, you have your mother, you have your brother, you have your sister, and you have you yourself. So that is father, mother, brother, sister, and you yourself. Now, let's say, let's say it is your birthday. What is there? It is your birthday, and your family members have got a piece of cake for you. Not a piece of cake, but whole cake for you. Okay, so this is a cake which have some strawberries on it. I'm not very good at drawings, but yeah, just understand this is your happy birthday. Okay, what we call it. Now, it is your birthday. Now, what happened? You will cut the cake. From this cake, one piece, I will just remove some of the part. From this whole cake, you will give some of the piece to your father and some of the piece to your mother. Okay, this you have already given. You have given them for eating. This is gone to father and this is gone to mother. Now we are remaining for the rest of the cake. So since it is my birthday, I will decide that whom I am going to give how much, that how much my brother will get, how much my sister will get, and how much I will eat by myself. Okay. So with this remaining portion of the cake, the red one, which is now being highlighted. So the red one, I need to decide that what will be the distribution ratio, because obviously we three are the younger generation of this family, and there should be some mutual understanding between all of us so that every birthday we get some benefit. So what you three guys have decided, the brother, sister, and yourself, you three have decided that whatever is remaining, out of that remaining, whoever has his birthday will get one extra piece. Whoever has his birthday will have one extra piece. And the balance will be distributed in ratio. Balance would be distributed, let's say, equally. Balance would be distributed equally. So this whole was remaining. Out of this 50% is for yourself. The zigzag lining, this is for yourself, because I get one extra piece because it is my birthday. I get one extra piece because I have got the major portion over here. And my brother and my sister will get the remaining ones. This will be for my brother and this will be for my sister. Now, what you have done exactly? I'm going to tell you now. First, you have given all the ones which you need to give mandatory. You cannot avoid them. You need to give the cake to your father and mother. Okay, that is the your duty to do that. So that you have given. After giving your duties in the same way, now look at your P&L account. Your concepts will be now very clear. So from the business, I have done all purchasing, direct expenses, sales, closing stock. I got the gross profit. I did some expenditure. Now the balance cake is left of rupees 8,000. How much the balance cake is left? The cake is left of rupees 8,000. Now I need to assess that 8,000 will be distributed how to all the partners. So now by this P&L appropriation account, P&L appropriation account is that balance cake which is remaining, which needs to be distributed to the partners by the terms which they have agreed mutually. By the terms which they have agreed mutually. So, for example, I said that whoever has the birthday will get one extra piece. So that is the commission that they are getting. One extra person is getting the commission, and the balance profit is being distributed into three of them. So, for example, if I say in our case, as Mr. X is working in the business regularly, rest all are not so much contributing. So Mr. X is charging a commission of 2000 rupees. Mr. X is charging a commission of how much? 2000 rupees. So now what is the balance profit? To balance profit transferred to remaining, sorry, the balance profit transferred to partners capital account. So let's say there were only we took the example of 5 partners. So what is the balance profit? The balance profit is of 6,000. And now it has to be distributed between A, B, C, not D, X and Y. So how much each one will get? So it would be your 6,000 divided by 5. So each one will get 1200, 1200, 1200, 1200 and 1200. This way your total would be 6,000, which is distributed to all of them, and your total of the debit side would be 8,000, as well as total of your credit side would be 8,000. This is how we will prepare our P&L appropriation account. So whatever which is relating to the partners, as I said, whether it is an interest on capital, whether it is a commission, whether it is a salary, or whether it is a profit itself, everything related to partners will come in the P&L appropriation account, because you are the owners of this business. So P&L appropriation is nothing but how you are allocating your profit to different things. That is the appropriation or the distribution of your profit, whether it is a salary, interest, commission, or a profit. That is what is being distributed all over here. Okay. Is my point clear to all of you? Is my explanation now crystal clear to you? Come on, everyone. Please confirm me so that I can move ahead. Yes or no? Okay. Moving on. So you know the meaning of appropriation now. You know what we do in the P&L appropriation account. Now, what? We are going to do some question on the basis of P&L appropriation account. Let me check what is the best example for you right now. Yes. Illustration number 3. Let us focus on it. Beta, did you got the explanation? Did you got the example? Yes or no? Crystal clear or nothing clear? That I need to know. Okay. Till the time I am reading my question, X, Y, and Z are 3 partners. Okay. And they're sharing the profit and losses equally. So let's say if they have a profit of 30,000 rupees. So X will get 10,000, Y will get 10,000, and Z will get the balance 10,000. Okay. The capital as on 1st of April 2020 were 80,000 of X, 60,000 of Y, 50,000 of Z. They have mutually agreed on the points, following point as per the partnership deed. So partnership deed is an agreement which they come into together so that they can decide whom will get the interest, commission, salary, or profit sharing ratio. So those are the very important characteristics of your partnership agreement. So first point, interest on capital to be allowed at the rate 5% per annum. So there is a capital of 80,000, 60,000 and 50,000. 5% needs to be interest on capital. That is the first point. Second, X needs to receive a salary of 5,000 per month. And third, Y to be received a commission of 4% of net profit after charging such commission. So this line is important, which we need to do after charging such commission. Okay. And then after charging all other items, 10% of the net profit to be transferred to the general reserve. So before doing any other thing, before distributing the profit, you need to transfer 10% to the general reserve. Now what we need to do, we need to prepare a P&L appropriation account and they have given a profit of 66,720 rupees. Okay, now let's start preparing a P&L appropriation account. First question, which we will do it together, and then you can try yourselves. P&L appropriation account. So starting point for this account would be your profit and loss. So if there is a profit, you need to write on the credit side, and if there is a loss, you need to write it on the debit side. In our case, it was a profit. So we have a profit of how much? 66,720. So I will write in my P&L appropriation account by net profit, or I would say by profit and loss account, 66,720 rupees. So that is the first thing, the starting point of my question. Second, now I have to give interest of 5% to all of the partners. That would be an expense. So I will debit 2 interest on capital. It will be provided to X, Y, and Z. So X has a capital of 80,000. The 5% of 80,000 would be 4,000 rupees. Y has a capital of 60,000. The 5% would be 3,000. And Z has a capital of 50,000. The 5% would be 2,500. So the total which is distributed now is 4,000 plus 3,000, 7,000 plus 2,500, that is 9,500. Can you tell me what is the balance profit left right now? Before doing any other adjustment, what is the balance profit left? So it is 66,720 minus 9,500, because 9,500 is the interest which we have paid. So 66,720 minus 9,500. Now the balance profit left is 57,220 rupees. That's what is the balance left that we need to distribute. Okay, but let's look at the second example. X is entitled to receive a salary of 500 rupees per month. So that is another expense. 2 X salary. So that is rupees 500 per month multiplied by 12. That would be 6,000 rupees. So now 6,000 is more deducted. Now what is the balance left? It is 51,220, because this is gone to X salary. 9,500 was gone to interest on capital, that is called IOC. Okay, then we have third adjustment. Y is to be received a commission of 4% on net profit after charging such commission. So beta, there are two cases. Now, before doing the question, let us understand the concept. There is one more concept which is covered over here. Not the concept, but I would say the calculation part. Just focus over here. Let's say I have a net profit of rupees 1,10,000. Let's say I have a profit of net profit of 1,10,000, and they say Mr. X is entitled to a commission of 10%. Mr. X is entitled to a commission of 10%. This is the common line in both of the cases. But what the change is? 10% of net profit before charging such commission. Before charging such commission. And another case, they say 10% of net profit after charging such commission. Both the things are very, very different, and the treatment will also be different. So that is why I need to take a separate scenario to explain you how the treatment would work like. How the treatment would work like. Because the net profit right now is 1,10,000. So if I want to solve the first scenario, it is pretty straightforward. When they say that we need to give a commission of 10% of the net profit before charging such commission, that would mean that directly apply the given percentage of commission on the net profit. Net profit or the amount whichever they are saying. So in our case, there was a net profit of 1,10,000 and commission would be equal to 10% of 1,10,000. That would be rupees 11,000. So this would be Mr. X commission. This would be the commission of Mr. X. So this is very, very simple. What is the change in this? Yes, beta, this is the traditional one. This is the normal one which we do in the normal way. We have directly applied the percentage to. But if they say that Mr. X is entitled to a commission of 10% of net profit after charging such commission, that means what? That means here, if you see on the first case, what is the net profit after commission? So earlier the net profit was 1,10,000. Now I have given 11,000 as commission. Now my net profit is remaining as 99,000 rupees. My net profit is remaining as 99,000 rupees. Okay, so this 99,000 is the figure which is called net profit after commission. Now in this case, what I have to give? I have to give the commission of 10% of net profit after charging such commission. So in this case, what you need to do, you need to apply a different formula. Whatever is the net profit, whatever is the net profit, you divide that net profit by 100 plus percentage and multiply it by 100. Okay, divided by 100 plus the percentage of the commission and multiply it by 100. So in our scenario, it was 1,10,000. The net profit was 1,10,000. We will divide it by 100 plus what was the percentage of the commission? It was 10%. 100 plus 10, and it will be multiplied by 100. So if we are solving this, so it would be 1,10,000 divided by 110 multiplied by 100. So this is the figure which you will get. 0 to 0 cancel on. 11 will cancel off this. This would be 10,000 and the figure would be 1 lakh. This figure which we have received, it is the net profit after commission. This is the figure of net profit after commission, 1 lakh rupees. Now you can directly apply commission percentage on net profit after commission. So this would be 1 lakh multiplied by the 10% commission. It would be rupees 10,000. So commission in case number 2 is 10,000, while in the case 1 it was 11,000 rupees. What they have done, they have changed only one word. They have changed only one word before charging such commission and after charging such commission. And because of that one word, our commission has been decreased, because here we are taking the base as net profit after charging the commission. So my base is 1 lakh rupees in this case, on which I am applying the percentage. Whereas in my earlier example, my base was 1 lakh 10,000 on which I was applying the percentage. That is the difference which I am talking about to all of you, right? So in our example, coming back here, we have a calculation. See, this was the profit which was remaining 51,220 before charging Y commission. Now what you have to do, you have to calculate the net profit after charging such commission. So this calculation would be 51,220. What was the rate of the commission? In the question, it was given as 4% of the net profit after charging such commission. So they have written at 4% after charging. So this would be 100 plus 4 multiplied by 100. So this would be 51,220 divided by 104 multiplied by 100. 51,220 divided by 104 multiply it by 100. So this would come as 49250. This is the figure of net profit after charging commission. Now, if you do 4% of this figure directly, the 4% of this figure would be 1970. And that is your wise commission. That is your wise commission. So now going back to my P&L appropriation account, here I will write to wise commission. Obviously, you will need a working note for this, but it is an MCQ, so no working note is required. But if you're solving it full-fledged, you would require a working note. So my figure was how much? 1970. Now 1970 is also gone from this. It is gone for wise commission. It is gone for wise commission. So the balance profit that needs to be distributed is 49250 rupees. It is the balance profit which needs to be distributed. Now what else they have given? We have given salary to X, we have given commission to Y, and then they are saying after charging all other items, all of other items have been charged, 10% of the net profit should be transferred to the general reserve. So what is the trend? 10% of the remaining amount. So here the general reserve would be, the remaining amount is 49,250. 10% transferred to general reserve. So it would be 4925 rupees that needs to be transferred to general reserve. So the balance would be 44,325 rupees that is left. So for transferring it to general reserve, what we need to do? Just let me reduce the size of it. For transferring the profit to the general reserve, what we need to do? We need to debit the P&L appropriation. So here I will write it as 2 general reserve. It is 4925. That is being transferred to the general reserve. Now the balance profit, it is 44,325. This will be distributed to the partners, and there were three partners who has an equal profit sharing ratio. So divide this figure by 3, you will get 14,775 for each partner. So now last entry, to balance profit transferred to partners in the profit sharing ratio. So X, Y, Z, those three will get 14,775, 14,775, and 14,775. The total of this would be 44,325, and my both the sides will get tallied. Here the total would be 66,720, and on the credit side also it is 66,720. So what I have done by whole this picture, I have distributed my 66,720 to interest on capital, to X salary, to Y's commission, to general reserve, and to the profit. This is the appropriation of the profit which has been done by this P&L appropriation account. Am I clear, everyone? So this is the illustration number 3 which we have just completed. This is the illustration number 3 which we have just completed. Any doubt, my dear? Can you do this type of questions where we have a P&L appropriation account? Yes or no? And are you clear with the concept of this before charging such commission and after charging such commission? Because obviously, if you don't understand this before and after, you will do the question incorrectly, you will distribute the profit incorrectly. You need to learn this formula. And if I say I can explain you this formula so that you can conceptually get this formula. So what in the numerator I am taking? In the numerator I am taking net profit before commission. I am dividing it by 100 and adding the percentage of commission into it. So why I am doing this? Now understand. Now this is just for understanding. If you know the formula, you can directly apply the formula and get the answer. Nobody will ask you the concept behind it. But if you are keen to understand the concept, now this is some extra knowledge which I am providing you. The extras, we can say. Okay. Do you want to know the extra or you can skip it? No, sir. We need to know the extras. That is very, very important to develop our conceptual understanding. Okay, beta. So let us talk about before. So if anybody says there is a net profit of 2 lakh 50,000, no, we will take it as 2 lakh 40,000 rupees. And they say, give me commission of 20% of net profit. So if they say, give me a commission of 20% of the net profit, that means, let's say you have 100 rupees of income. So what this person is asking, out of this 100 rupees, give me 20 rupees of commission because it is 20%. So give me 20 rupees of commission, and now you will be left with rupees 80. Now you will be left with rupees 80. 80. That is your net profit after commission. Okay. So what was this income? This was net profit before commission. In this example, what we have did on the figure of net profit before commission, we have directly applied the percentage of the commission. We have directly applied the 20%. We have directly applied the 20% on net profit before commission. Okay. And the balance I have got is 80 rupees. So can I say if this 100% was my income, I have given 20% to my agent or to my partner, and now I am only left with the 80% of the income? Is this correct or no? Hello? Am I correct over here? So in my example, I have a net profit of how much, bacha? 2,40,000. My net profit is of 2,40,000. So can I say this 2,40,000 is 100% of my income, out of which 20% I need to give to my agent? That is 48,000. 20% of 2,40,000. It would be how much? 48,000. And the balance would be 80% is net profit after commission. So what is the net profit after commission? That is 1,92,000. The balance is rupees 1,92,000. Okay. This is my 100%. This is my 20%. And this is my 80%. Now what I have did 20% of 2,40,000, which is my 100%, which is my 100%. But now let's go to the case number 2. Case number 2. Again, we have a net profit of 2,40,000, but they are saying, give me a commission of 20% after charging such commission. That means what, my dear? You have 2,40,000 rupees of profit, but I want the commission after charging. I want the commission of 20% after charging that commission amount. So if I say the commission amount is X, commission amount is X. So what would be the amount after charging the commission? It would be 2,40,000 minus X. Hello, everyone. Are you there with me? So this is the net profit after charging commission. Yes, sir. I know that. Now, now, if I deduct X from 2,40,000, so what is X? What is X exactly? X is the 20% of commission after charging such commission. So if I do 20% of it, can I get my commission? Hello? Can I get my commission? The answer is yes. So this is my commission amount. This is the equation of my commission. So now what is the whole equation? 2,40,000 is equal to 2,40,000 minus X. 2,40,000 minus X. This is what? Net profit after commission. This is my net profit before commission. And if I add commission to this, so this equation will be complete. This equation will be complete. 2,40,000 is equals to 2,40,000 minus X plus 20% of 2,40,000 minus X, because that is the commission amount. Yes or no? Yes, sir. So this 2,40,000 will be again Now let's open the bracket. It would be 2,40,000 minus X plus 20%. 20% of 2,40,000 is 48,000. And 20% of X is 0.2X. It would be 0.2X. Let us solve this. So 2,40,000 would be equal to this X and this X minus X minus 0.2X. This will become minus 1.2X, and here 24,000 plus 48,000 will become 2,88,000. Okay, this minus will go over here and this 2,40,000 will come over here. So 1.2X would be equal to 2,88,000. This is 88,000. 2,88,000 minus 2,48,000. So here X would be 2,88,000 minus 240 will give me 48,000 divided by 1.2. So X would be 48,000 divided by 1.2 rupees 40,000. So 40,000 is the figure of my commission. 40,000 is the figure of my commission. Now let us go back. My net profit was 2,40,000. If I deduct the commission of 40,000 from it, what is the net profit after commission? It is, sir, 2 lakhs. Now can you check? Can you check my commission? My commission is equal to 20% of net profit after commission. So my net profit after commission is coming to be 2 lakhs. So 20% of 2 lakh would be 40,000. So that is the correct answer. And what formula I have told you right now is net profit before commission. You need to divide it by 100 plus your commission rate, multiply it by 100. By this formula, you will get the net profit after commission. And on this net profit after commission, multiply your commission percentage. You will get the amount of commission. Now let us do by our formula. So net profit before commission was 2,40,000 divided by 100. What was the commission rate? It was 20%. 100 plus 20 multiplied by 100. So this would be 2,40,000 divided by 120 multiplied by 100. So 0 to 0 cancelled off. This would be 20,000. Sorry, 2,000, and 2,000 multiplied by 100 would be 2 lakh rupees. So 2 lakh rupees is my net profit after commission. And what is my commission? It is nothing but 20% of net profit after commission. That would be 20% of 2 lakh rupees. Answer is 40,000. The same thing which we have derived from the equation earlier. So that is the same concept which we are applying over here. Now, is this clear to all of you? Come on, everyone. Is it clear? Can you do this type of questions? The net profit before and after commissions and everything like that? Yes or no? Okay. Let's move ahead. Now, there is a question, illustration number 4. This is based upon your balance sheet. Okay. So you need to prepare the balance sheet as on 31st of March 2021 in the books of Mr. X. What information they have given, my dear? Please look it. So they have given capital of 2 lakh rupees, drawings of 40,000. So you know the capital, we can deduct the drawings. So 2 lakh we have written on the liability side. drawings is deducted 40,000. Okay, let us do it side by side. So cash in hand is my asset, 20,000. It will be written on the asset side. So cash in hand 20,000. I have written it on the asset side. Okay. Then we have loan from bank of 40,000. So if it is a loan, it is a liability. It will come on the credit side. It is loan from bank 60,000 that we have written over here. Oh, there is a loan from bank of 40,000, not 60,000. So they have written it incorrectly. This should be not 60. This should be 40,000. Okay, there might be some adjustments which we will come across. Loan from bank, currently it is 40,000. Then we have a creditors of 40,000. So we have sundry creditors of 40,000 that we have mentioned. Then we have bills payable of 20,000 and bank overdraft of 20,000. So we have a bank overdraft which is also our liability 20,000 and bills payable also, that is 20,000. Okay. Then we have a goodwill of 60,000. So goodwill is an asset that is of 60,000. Goodwill is 60,000 over here. Then we have debtor of 80,000 and land and building of 50,000. So land and building 50,000, debtors we have of 80,000 that we have mentioned. Then we have plant and machinery of 80,000 and investment of 20,000. So plant and machinery 80,000 and investment of 20,000. Then we have bills receivable of 10,000. So here we have bills receivable of 10,000. Then we have some adjustments. There are some adjustments which we need to do. Okay, now you can see that more than 50% of the balance sheet is already complete. Just by looking at the balances, you can post it directly, and more than 50% marks you have already got. But obviously this is not a descriptive exam, so we don't need to go by marks, but we need to go by the adjustments. So let's focus on the adjustments which they have given. So they have given outstanding liabilities for salary. There is an outstanding liability for salary. It is 10,000 rupees. So outstanding liability, that is salary, 10,000 rupees they have mentioned right now. Then we have wages of 20,000. So wages of 20,000 we have also write it. Interest on overdraft is 3,000 and interest on bank loan is 6,000. So interest on overdraft 3,000 they have mentioned over here, and total they have written 23 over here. Interest on bank loan is 6,000 mentioned over here, and total 66 mentioned over here. So this should be 40,000 as I mentioned. So 40 plus 6, this should be 46,000. Okay. Then we need to provide interest on capital at the rate 10%. So our capital earlier was 2 lakh rupees. The interest on capital is 20,000, which is provided, which is being added to the capital. Then we need to charge a depreciation of 10%. Okay, 10% depreciation. So 10% of 80,000, that is 8,000. So net balance is 72,000 outside. Bad dates were 10,000 and make a provision of 10% of the Sunday debtors. So how much bad debt was there? 10,000. So if we deduct the bad debts, it is 70,000. And now we need to create a provision of 10% of bad debts. So it would be 70,000 multiplied by 10%, that is 7,000. And we have a total outside of 63,000. That is complete. We have a closing stock of 1,20,000. So we will write a closing stock of 1,20,000. And at last we have a net profit of 96,000. We will write 96,000 as net profit. The calculation will be done and total would be 2,76,000, which is down. We do not need to consider this total. This total can come in the inner column. 3,60,000 minus 40,000, that is 276. Everything is posted, your balance sheet will be automatically tallied. Okay, but they have done a misprinting over here, so there might be some adjustment that should be the correction, but we are not focusing on the calculation errors, but we are focusing on the concept. So this is how you prepare a balance sheet from the information of the GL given. Okay, so that is the brief discussion which I have done for one of the question. We have done one more question on the P&L appropriation. Now I want to give you one question that you can solve independently. Let me check. One I have already given you in homework, that was illustration number 8. There I asked you to prepare the final accounts based on the following particulars which was given. So you needed to prepare the trading and P&L account, trading account, profit and loss account, and there was profit and loss appropriation account as well. So this you might not have prepared, but now you know the P&L appropriation, the profit will come over there, and then you can prepare the P&L appropriation account. But this is not actually the P&L appropriation. This is the balance sheet. Again, there is a misprint. This is not the P&L account. This is the balance sheet because they have fixed assets, machinery, loose tools, current assets, etc. So this is the balance sheet. Okay. Now try to do today's homework. That is, hmm, I'm trying to give you a good question so you can have a little bit of brainstorming. Okay, let's do the just next question, illustration number 9 in your homework. There are many questions which we are going to solve in this. So illustration 9 is going to be your homework that you need to do, and then we can discuss the doubts for illustration number 9 and we can move ahead. One doubt there is, I think, asked about the balance sheet asset side and liability side. So why here debit side and credit side? No, beta. Balance sheet has only two sides, your asset side and your liability side. That is correct. But by default, all the assets are a debit balance, and by default, your liabilities and your capital has a credit balance. So technically, your balance sheet does not have a debit or credit side, but they have a asset or liability side, and asset are of the nature of the debit and liabilities are nature of a credit. So if you look at the balance sheet, this will be your debit side and this will be your credit side. But we do not write the credit or debit over here. We can directly mention it as liabilities and assets. If there is a negative capital, if there is a negative capital, then it will be on your debit side because it is a debit balance, which is not really possible. But yeah, if I have invested 1 lakh rupees and I have earned a loss of 1 lakh 10,000, so I have a negative capital of 10,000. Okay, so either I can write negative on the liability side or I can write 10,000 on the asset side, but this is not actually a asset. This is loss. This is actual loss, which is exceeding my capital. So this is in accounting, we call this as fictitious asset. Fictitious means fake. It is not actually asset. It is a loss. Okay. And what is the fictitious asset? It is your negative capital. So obviously, if I have got a loss of 1 lakh 10,000 and my capital was only 1 lakh, so whenever I will introduce new capital, let's say I've introduced 90,000 more. So this 10,000 will be adjusted, and on the credit side, I will write only 80,000. Okay, so that is the concept. Is it clear? Any other doubt, anyone? Hmm. Example 4. Are you talking about illustration number 4, beta? Or this one? Example 4, Sunday debtor is my asset. So in credit side, no beta, Sunday debtor should be on your debit side. So is there anywhere? Wages, salaries, depreciation, advertisement, power repairs to machinery, opening, closing, interest, commission paid, bad debts, provision. Okay, in this there is nothing like that. And illustration number 4. So debtors, sundry debtors is on your debit side only, my dear. Okay, that is correct. And in this example, there is no debtors which is present. If you are confusing debtor with bad debt, so bad debt is the debtors lost. That is an expense, that is a loss basically for you. And this is on your debit in the P&L account. Okay. If you haven't attended any of the previous lectures, so please watch the previous webinars where you can get the recovery, right? Okay, in the book they have given here debit and here credit. Just ignore this. This is rubbish. Just ignore this. This is nothing. This is your assets. Write it correctly. And this is your liability. That's it. Okay, guys. Thank you all. See you all later. Bye.